Welcome guys, it's the Crypto Sniper. In this video, I'm going to talk to you about a number of things. So listen up, a couple of key points for you. First of all, we're going to have a look at the statist tokens, those tokens that are very much part of the control structure, any future central bank digital currency, any arterial piping around establishing a blockchain-y type based government controlled centralized system that will be part of our new financial future. We'll be looking at a couple of those. So that's number one, the statist coins. Yes, indeed. Some folk call them the banker coins. What else are we going to look at? We're going to have a look at a number of small cap tokens that have done upside pops. Go a run through of upside trajectory popping small caps. None of these are recommendations. I know next to nothing about them. These are purely technical spots that have either happened or are in the process of happening. And then we're also going to have a look at the macro environment, which is all around the dollar. So we're going to take you a little bit out of crypto for a short spell, and give you our take on what the dollar does next and why that's going to be important. It'll also include a run through gold, which is essentially the old world value of real money that doesn't come with a liability on issuance. Remember, gold has no liability attached to it. Every other fiat, which is currency, is borrowed into existence, and your mortgage is the bank's asset as it is your liability. Then what else are we going to do? Well, I've got a secret trade for you that I'm going to leave at the end for you to watch, and it's readily accessible on a number of platforms, so it's not one you're going to have to worry too much about being able to put on if you're interested. Remember, not financial advice. And then we're going to have a look also, before we get to that, at BTC on other crosses. Bitcoin, how's it comparing against the NASDAQ? And how's it comparing against gold and potentially even an indice? So it's quite a bit to get on with. But before I start, I'm going to go into a little bit of the weeds. I'm not a financial news guy. There's plenty of Twitter news, etc., etc. But Celsius, I paid scant attention. It just sounded like another Ponzi. I saw the name Mashinsky. I saw some of what he got up to, and I said, yeah, pretty par for the course, only later to be caught in a similar sting with the FTX. So let's talk about a little bit of what's been going on Celsius. I am actually quite a noob to the goings on Celsius. Some of you will be more practiced than me and will have a better idea, but I'm just jumping on and getting a little bit of the tail end of the news because there's been some legals. So let's talk a little bit about this because this is important. So number one, I'm looking at some of the tweet flow over here. Clearly Mashinsky this is how my best understanding at a very granular level. There's a number of people that are coming out and saying out and out it was Ponzi-esque. In other words, from inception, there was no real money making aspect. There was no real business aspect to it. It was largely insolvent from inception. And the token, the receipt of coins was used, your coins was used to actually pump up the sell token and subsequently distribute their own holdings, of which Mashinsky was one of the biggest beneficiary and sold personally an immense amount. This is a guy that is not masking his fraudulent behavior particularly much. He's right in there. There's some interesting other bits though that have popped out that weren't familiar to me and I didn't pick up, and there's so much going on. Tether. So I'm sitting here with Bitfinex, and Tether actually had a role and did a loan to Celsius apparently in the original inception of Celsius. In fact, I'm reading by Bitfinex, who's hot on the trot about Bitfinex and Celsius. Says the Celsius Ponzi scheme was funded and supported by the Tether fraud. They gave billions of Tether to the Celsius Ponzi scheme, which we know with certainty that it was an out of control Ponzi scheme. So that's an interesting accusation. When I look at the article, I see 30 million first equity round has Tether International as a 10 million lead investor. So whenever you raise capital, you do a special deal to have a core tenant. It's a bit like being a commercial property guy. If you get Walmarts in, the rest and the smaller businesses will follow. You have a big ass piece of space, you get Walmart as an anchor tenant. So Tether was essentially an anchor tenant of capital provision. In a request for 30, they showed up with 10 alone, which is a third of the money right up from the upfront. Now there's been some confusion because some people see zeros being missing, and that in actual fact potentially $1 billion was provided. So it's quite confusing to understand what in fact has been provided. And apparently Bitfinex, or Tether, let me rather say Tether International, they're separate to Bitfinex, have said there was typos involved in terms of money, that how much money they committed. So there's all sorts of really sloppy, weird stories going on in terms of Tether's involvement. Who else actually played a role in the Celsius debacle? Well, we're hearing that Alameda and our friend SBF also were intricately involved in big withdrawals that led to massive sales that precipitated the collapse of the Cell token. Fluffy Ponzi that it was anyway. So we're getting all the criminals in the same room, all the same kind of people that are very, very dubious. And this is my great concern with crypto. We haven't filtered out all the Trojan control fraud individuals that are essentially in it for themselves, in it for theft, in it for a misrepresentation and a whole bunch of things. So let's just have a look at another tweet that came out. And in fact, this is a blog, so I'm going to quote from Crypto Manthan. Let's give him credit, Crypto Manthan. In the recent report, the bankruptcy examiner on the Celsius network says the bankruptcy case has represented a report of 600 pages, how it worked as a Ponzi scheme basically from inception. So it didn't try to be a business, battling along, then decide, listen, let's pull a fast one here and grow it. It literally was by design in its initial, before even begun. It was inherently a Bernie Madoff scam. It was so shocking to see things mentioned in the Celsius network, things like the Ponzi Cell token, discussions between the Celsius network regarding the implementation of token manipulation, and many more things, plus the holding up of the price, while good old Mashinsky, the Sabbatean Frankist, did mega dumps himself, apparently at $68.5 million worth that he removed. What was also interesting is I poodled over to Mr. Mashinsky's website of all his great things, and he has a timeline here, and it's for now, it's worth me actually showing you, I suppose. You can see all these great things. There is the legend himself, doing good, then doing well. So he's doing good things. Doing good, 7.8 billion referred. Doing well, 10x returns. This is all his CEO-ness of other things. Now, if we scroll through this very flattering timeline, you will see as part of his doing good stuff, creating a new financial system, Celsius invented yield on the blockchain and paid over $1 billion to its community. Well, I wonder how many of them actually received any of that $1 billion and how much of it is locked up on yield that's not returned. By the way, many Americans are receiving what's called a 1099 to declare income on yield they've allegedly received that they haven't actually received, that Celsius has notified the IRS about despite its current condition. And that means people are having to pay tax on money they've not even got or received, but that at an accounting level at least they have been promised. Isn't that an absolute absurdity? Well, you can see the brag of 4,000% in 2020. How nice it is for him to brag of 4,000% on his Cell token. In fact, we can expand that chart and have a little look, showing how much higher it is than Theta, Link, XEM, ETH, and everything else, most of which are still around and still trading with reasonable liquidity, compared to his 3,584%. So at one point they were bragging of actually offering up to 18% in yield for sending your Bitcoin. That essentially seems to have been a largely orchestrated, misrepresented fraud. Despite this, justice is proving quite hard to find. In fact, I saw one tweet, although things are far from decided, where it was determined that you did not own your asset that you provided to them according to their terms and conditions. So the legal system may well be working on their terms and conditions, even though others have pointed out that the terms and conditions should not be upheld because they were entered into fraudulently. What are the legal consequences of contract fraud? Well, when a contract is found to be fraudulent, it is generally considered to no longer be enforceable. In other words, the seed of it was spoilt from the very outset. Contracts are void when there are mistakes or cases of duress or fraud. In other words, me holding gun to your head, you sign here, is not a valid contract because you were placed under extreme duress to make a signature. Fraud, what determines fraud? The injured party may sue for fraud when this is a case where the contracting parties undertake certain actions that were in bad faith, misrepresent, so that causes economic injury to another party due to through misrepresentation. And it's a contractable claim. It must be important and material facts that were either left out or misrepresented. In addition, the defendant must have intended to defraud the other party, so there must be intent. Well, as I've said already, this literally seems like it was a Ponzi scheme from the get-go. Very well marketed one indeed. No doubt with the backing of Tether and the friends like SBF and Almeida, it could have got all forms of credibility associated to it. Anyway, let's leave that and get on with what I'm more known for, a little bit of chart analysis. Let's take a look at some of the pops that have been happening. By the way, this is a look down through much smaller charts. Most of these I know nothing about and are not recommendations. The clear point though is on the lower time frame, certainly certain alts are moving. Now, I don't want to become a purveyor of unknown tokens. I don't know the origin of, so this is just an observation. It's not any form of a recommendation of any on the charts involved. Let's have a look and see what we've got. So first of all, SHIB. You know this one. This is one that most of you will know. How seriously you take it is an entirely different matter. So SHIB, if I take a look in the 2 hours, has had a number of our kind of setups that we like to see. And in fact, you can see that it is also broken to the upside. That does not make it a sound investment, but it has been along or been around a while longer than Celsius managed, so who knows. Also, having made this recent target over here, we can see that it doesn't look too threatening. Could be in the category of a falling wedge and may roll again, but that is all going to be determined by A, the macro, and what the dollar does next, what Bitcoin will do as well. So remember this. This is not a recommendation, but just an interesting comment. Who else has done a little bit of running during this period? Well, let's have a little look and see which other of the small tokens, maybe one of them is yours, has been running. Optimism is one that I was given. A nice name, I suppose, especially in this world of positivity where everything is awesome. If we take a look at Optimism, again, truly know nothing about this token, but just to broaden our coverage out and to talk a little bit about the little guys, you can see that it too has had a bump up. I'd be a little bit more circumspect about chasing in right now on our friend Optimism, and there was some news related to Optimism that came out that may have been a driver. Remember, crypto friends, news can often be a point to sell. Many people are buyers on the yet to occur PR that subsequently occurs and sell into the strength of everybody who reacts to the news. Do not a news trader be. So we're seeing a bit of a softening on there. We'll be talking about our God market, Bitcoin, not only against the dollar, but on the other crosses still to come. Plus, don't forget, for adhering and staying with us, you will be seeing our mystery trade that could be developing. One that will be available to you on more platforms than the likes of Optimism and a few of his friends actually appear on. What else? Well, here's another one. I did a bit of a fancy chart work, and I'm going to bring this one, both my draw on as well, so that you can see the fullness of it, because there was a gent who was showing me, and I had to just give him a little bit more on the charting side so that he could see it. And that is SSVBV. Now, ask me what this token is or does, and I will be absolutely at loss to tell you. And I'm not even that sure that it merits my curiosity to get an answer. But maybe in time, if it sticks around, we could decide whether we want to get to know it a little bit better. But what you can see technically is that we've been expecting, after a reasonable period of basing out, that this could in fact have some reasonable upside. And so it has made decent moves to the upside. What is it? SSV? Well, I've got it against Binance USD here because I've got it on the Binance platform. They really love their token. And bear in mind, because of the fairly big time frame, I've also got it on log. So if I delog that, you can get a bit of a feel. Quite a new token by all accounts. Not too much history in terms of Binance, coming on in August of last year. Little bit of a left shoulder, a head, and then a right shoulder, making its way up to a target. So we're seeing a couple of new listings, a couple of existing listings having short time upside HVF structures. In fact, I highlighted to the guy who was posting and asking my opinion on this that in fact you got an earlier head and shoulder in here that triggered there, and you could have got in sooner. And of course you get a bit of progress decay after running your target, which is a pullback period. It wasn't too intense, as I've mentioned before. On the previous token, it actually had a falling wedge structure to it, like that, which is a precursor to usually continuation and resumption when it breaks, which it did. And it broke that new neckline, which was part of its early doors trade, and you aren't too far off a target. So keep an eye on this one. Just saying, might be interesting to have a watch. Many of you wish we covered more of the small caps. Actually, I keep an occasional eye out of curiosity, mainly for the technical interest. I do warn you that any of these could be a Celsius, any of these could be an FTT token, and just because we saw it as technically interesting does not by any means mean that that should be a tradable entity for you. Let's have a look at something that's a little more interesting. I spoke of that I would cover the status tokens. The status tokens. What do I mean by that? Well, the status tokens are the ones that we suspect are going to be involved in the larger banker game, the replacement of your cash, my good friends. And I found this particular a tweet originator, I can't recall who had it up there and who I should be paying credit to, but it was diagrammatically interesting because it had the traditional finance and accounting realm of IBM, for example. It had Consensus, which I know runs the big event in New York and is also, by the way, invested in by many of the bulge banks, the Fed banks, the JP Morgans and the Goldman Sachs. And as you can see here, JP Morgan is in fact, despite having a chairman who talks smack about Bitcoin, is in fact involved. So there's quite a bit of reference to R3 and Interledger. I'm not even sure if those are tokens or not, but the ones I am sure are tokens and have been courting the central banks quite aggressively is Ripple, for one, and their role interfacing apparently with IBM that may include HBAR, Hedera Hashgraph. Now they are privately essentially owned, or as a corporation at least, and don't make any case for being decentralized at all, and assert IP over their particular hashing that is more effective, faster, scalar, better, you know, the better new thing. Maybe that's true, maybe it isn't. You tell me what you think in the comments, by the way. If any of these are your favorites and you like them, or you think there's anything unique, tell us what you've learned, because you're going to upwards inform me as much as anything else. Stellar Lumen has a role to play apparently. Now there was a common link between XRP, Caleb, I think it was, who was in Ripple and left Ripple and went and established Stellar. So who knows? Who knows? Who knows? But if you are expecting things to go up, and by now I'm hoping you have no doubt in your mind that central bank digital tokens are indeed coming, and that the current blockchain tokens, some of them will definitely be involved in playing a role in bringing together all of this. We move on to Algorand, which I know is working with central banks specifically. So they have been very, very quasi-dark state governmental orientated in terms of their game. I would expect all of these tokens to survive and in certain instances potentially do quite big leaps in value as the demand for that token in use of the system proliferates. But it doesn't have to go up. It just can be useful and be used a lot. Utility doesn't always mean appreciation. So of course, how much you lock up in the system, how much more is needed, demand fundamentals. Generally, I would say it's a positive thing, but it's a positive thing inside a very negative statist control structure world. Quant is another one. And of course, our legacy hero, Ethereum. Ethereum, Vitalik, put your property on and declare its value, and we will tax you accordingly so that we can own all your property and rent it back to you, and you will own nothing and be happy, meaning we will take everything off you with our created money that will be blockchain based, digitized, conjured on a computer, and you'll be taxed out of your existing home after you've been invited to register your property, and how much you paid, and all the information that could prove useful to us. And then there's the Internet of Things, of course, that will have your fridge spying on you, your washing machine, your toaster, and everything that is collecting data on your movements, your activity, how much energy you consume in this world where credit cards are now tracking your carbon score because you're killing the planet. That's right. So these are, I would go so far as to say, are far from your friends, but they may go up. Do you want the money? Take it, hold your nose, wipe your mouth. Are these those kind of investments? Spit one way, look the other, but take the money. I don't know. Accenture, accounting companies, and many others. We will see in time about this diagram, but these particular tokens all seem to play some part in the status role. IOTA, Algorand, Quant, Hedera Hashgraph, Stellar, XRP, and Ethereum. There you go. Now you have all 6 of them. And our thoughts. Maybe, to spoil you, we should take a run past their charts. So for that, I have created a little status list, and we will do exactly that. So we're looking at XRP. There's something going on here on XRP. It's looking a bit heavy for my liking, and I want to warn that there's still the deep potential on the macro, and we'll cover this more in a bit, in terms of what can come for dollar strength, weakness, etc., or demand killing events in this environment. We have just had, crypto friends, one of the heaviest weeks of data. So we had the Fed talk and raise by 25 basis points. We had the Bank of England raised by 50. The ECB raised by 50, and we've had heavy tech reporting going on and on and on throughout FaceAche, Amazon, Google, Apple. You had other big macro corporates all reporting on the previous year coming in during the course of last week. And then on Friday, we had a miracle number of employment. America created nearly over 500,000 jobs in a single month. Can you believe that? No, I can't either. But nonetheless, you've never had it so good. And that's going to be a function of the birth-death model, the fraud that is the BLS, and the non-farm payroll stats that created an outlier on an expectation of 190. They delivered well over 500,000 brand new jobs, which actually adds jobs in on a birth-death model basis. That is a statistical lie in essence, and departs from many other employment, which continues to show a climbing job creation but somehow departs from other survey-based employment research. So we pivoted now to the macro, so we may as well carry on while we prepare our status tokens that we'll be looking at. So last week being such a heavy week, we can sometimes get new directional bias. As the first, we're in literally, it was February, beginning of February, end of January, and we have the first major news spell, and it can lead to new directions. So we'll cover that and more when we take a look at the dollar. But let's have a look at Ripple. At the moment, that's the 6 hourly. We'll take it up to the daily. This is a bit of a languish that we're seeing here. It's a bit of a weak languish, and I want to warn folks a little bit about the potential for bearishness. I know many of you are sick of tired of me when I was perpetual bear during the bear period, and I have highlighted a couple of small tokens that are getting away on low time frames on upside breakouts. On 2 hours, 1 hour here, you're nicking pennies in the fast lane of the current economic environment and the current benign period for Bitcoin, where we've had a bit of a rally and we've been grinding higher, and now we're getting a little bit dull at the moment. During that period, we have allowed 2 hour, 1 hour, 4 hour setups to have a little bit of a runs. That does not mean the macro is all sorted. We could be over. We could be over, and this could be 100% a bottom, and we will not visit these lows again. That potential exists. But let me just warn you, we've just highlighted Tether, Celsius, FTX. So much going on there. And then Tether, of course, associated with Bitfinex. There's still the Binance FUD that is out there. There is scope for major hits to the downside still on the crypto environment and game. If you think this chart could be upside, I'm here to tell you that this is the upside down chart of XRP. That's right, inversions. I fooled you. I like to do that. Look upside down, have a look at it. What do you think? What do you see? Well, that is a flag that could break down, which is actually up on this little structure here. But that doesn't mean we would be all things hunky-dory. It could do this, we could come back up, and we could have further deval to come. We'll talk more on the risks of macro, apart from those potential landmines that could be triggered right here in the crypto space in all the names that I've just mentioned. So don't forget, invert your charts. Not sure I like that. I would have called this an upside, with initial possibility of down first, but then future upside. When I look at the XRP, the right way up looks a little sick. It looks a little flat and a little sick. Many will say, but bottoming. What we need to see, how would the bottom look like? You can start to feel a little bit better, and you need a 55 run for me, because then you will have a clear key level over here with a downside, a neckline, a pause, which was also a descending triangle that started to go up and got smashed down. That of course did coincide with the FTX news, and a secondary butt cheek, if you will, and another descending triangle here. The way we get positive and we feel a little better about the future for the price appreciation on XRP is we get back up to the 55 cents level. If we were to have a nice strong 55 move and maybe a little bit of a dance around and then we go, that would be deeply encouraging. And I think with the lows in and around, what level was this? We will measure it. You could start to feel that there would be a chance for upside. That is what's required, and it requires a fair amount of aggressive upside to come out before we get some form of structure to the upside. That's 28.7 was the low to 55. Let's say 30 to 55. You're at about 25 on to 55 plus another 1.25. You're going to be 55 and 25. You're going to be about 80 cents, 82 cents, which would take you in and around that level. If That's not a call, by the way. That's if you can deliver on that upside W bottom. However, as I'm highlighting, I'm watching this on the upside down view, and I'm saying another dip down, a little bit more, and we start drifting back up after a dip down, and you could be ready to head for the 12.9 cents. That's not going to be popular. 12.9 would be somewhere down here. So nobody's going to enjoy that. And that would probably be associated with further crypto subterfuge. So you have Tether, you have Bitfinex's association with Tether, you have Binance, still some FUD floating around there, plus you have the likes of FTX, Celsius being rung through the chapter. Is it 11? Is it 7? I don't know. I can't keep up with legals. Those things tend to bore me immensely. There's still a lot to come out that could get a little bit iffy. What could happen, and I don't want to be the uber bear, but don't write out the possibility of this particular scenario, good people, is all forms of perceived private crypto is killed. So if you want blockchain, you can have blockchain, but it's government blockchain. It's CBDC. It is approved only to use the rails, authorized, form fill, who are the people, what are you doing, in the name of keeping you safe, and also controlling who has the right to issue tokens and the equivalence of essentially many things that could be deemed replacements for currency, which many assume is money itself. Of course you shouldn't. Okay, so what have we covered? We've covered XRP looking a bit sick. Funny enough, lumens, log scale, I'm going to give you the bigger time frame on lumens, and let's just go for a number of days. Here's what I have for you on lumens. Potentially, if the scenario is a bull scenario, so I truly am flexible to all things. The destruction of private crypto, don't forget this is a statist one. This is why I actually think it will survive, because it's involved potentially with government and government initiatives. That was a big reversal pattern, left and a macro head there. That was made, by the way, beautiful target fulfillment. That was your 2017 high. Now the nice thing I like about this is the fact that it failed to make a new high during the period of Bitcoin's 69K run. In actual fact, this is a lower level. So on the bigger time frames, you actually have the potential possibility of a macro squeezing event. Could we be having the equivalent of a first cup gold nugget, a quick to rip macro runner in the likes of this status coin XLM? That looks technically better for me for now than Ripple. Ripple of course does have the court case. I don't know where they are with that, can't keep up. Again, legal matters and getting bogged down and admin and T's and C's. Those things tend to bore me a little bit. I don't know where that is, when the next hearing is, etc., etc. It's too much to keep up with in my little brain. This, however, is a falling wedge. And by our recommendations, or not to say recommendations, our calculations or assessments, we are actually finishing a first impulse. We've had a big bloated second. You can learn more about this, by the way. And if you're finding having a look at these status tokens with me interesting and valuable and getting a technical take, if you appreciate it, we want to thank everybody, by the way, for all the likes we are getting and all the shares we're getting. We're getting good growth on the crypto channel, on both our channels, the Market Sniper as well. We'll post even more if you do even more for us on that. Fool the algorithm, if you will. So that's a second bloated kind of sell-off. And then it feels like there is a third impulse. We like to see 3 in the 3 impulse, and you've now potentially having a technical break there. So that's one to watch on a smaller and a bigger time frame. And we expect, if I go up to a bigger time frame like the weekly, were this to rally and build up this particular setup, we could see $6-7 all being possible on Lumen in the future, assuming the bull scenario. So we've given you a scenario where Ripple could go 12 cents, but it could also go 85 cents. And we're giving you a scenario where something that is 9 cents at the moment. Is it 9 cents? What is it at the moment? It looks like 9 cents. Yep, 9 cents at the moment could in fact be $6.67 to the upside. I guess it would get more refined closer to the time, but there is a big potential structure. So we feel better about Lumen for now than we do about Ripple. But we expect them both to be statist and both to survive. We also expecting a demand destroying event to potentially happen that could be to the downside. So what about H-bar? So H-bar did give a little bit of structure. And short term, on a smaller time frame, me and some of my community friends, go to themarketsniper.com if you want to be part of that, did take a long earlier here. We sat through a falling wedge that dipped quite low over there. And then the Dell announcement. So the Dell has been made part of their governing committee, etc. on Hedera Hashgraph. So this is again the merging of tech, hardware, computers, data software, integration with blockchain, crypto, Hashgraph, all of these things merging, these statist entities that run Windows, which of course is Gates and viruses and spyware and you name it all. This is the holy trinity of surveillance finance coming right at you, good and proper. You will be monitored and you will like it. Otherwise, your chip will be switched off and you can go to sleep permanently. Anyway, all this dark humor aside, bit of a broadening now, little bit tired, made it second interim, but we feel that there was a 8.6 in it. So you missed that one by not being in the community, but we're telling you about it now. It might come a bit low, you may be able to get into it. Be careful where you place your stops. None of this is recommendations. Algo Rand, yes sir, 3 bags through. Mr. Central Bank Digital Currency Working crowd. We talk about this as in our core content on key inflection points, and that was it over there. The moment after your third, you get rising wedges. This was again an extended second impulse. Rising wedges, squeezing higher. Many would have thought head and shoulders, head and shoulders. No sir, 3 bags, full pop out the top going higher. Can I chase that? No, I can't and I wouldn't. Is it an HVF? No, it's leaning into a wedge, but it has the 3 impulses within it. The DNA of upside. So it's squeezing higher. That's the retail trader's trap. Because if you trade support and resistance, the minute it makes a new high, you go long and then you get shaken out for a short. Then it makes a new high and you go long and you get shaken out on the short side. Flushed out, but you don't have a stop loss. You don't know where to put it and you don't have method. And that's your problem. You need to learn and grow and do those things. Then it takes out the high and you get flushed out again. And then it takes out the high and you get flushed out again. And then you say, damn this damn thing. It seems to be a whole bunch higher than when I first started buying it. But all I've done is lose, riding all the crashes and the pullbacks and missing most of the upsides. That is the folly. So the more you get retail traders, the more the chart through their activity makes the hardest natural pattern structures for retail traders, because you are rewarding people who pump at chase pumps, and what ends up happening is you get structures that punish people that chase pumps, because too many people are buying up along the bottoms and chasing, buying up along the bottoms, chasing into grind lines and getting washed out. There are grind lines aplenty here. Grind line theory is another concept that you'll learn about with us, and you will see all of these are flush outs, and there were many a potential rising wedge with a flush out only to go higher to make a new flatter rising wedge squeezing higher. This is complexity of patterns that overlay and keep rinse trapping you, and it's very, very difficult for someone who's not got a methodology to trade. But nonetheless, Algorand is going up. So our status coin, Algorand, going up. Who else have we put in there? We put in Quantum because it was on the list. Technically, do we like it? Not really right now. Not really right now. Flat, looks almost a little bit flat bottomed. It looks, traditional technical analysts would call it a descending triangle, but amazingly, sometimes these descending triangles break to the upside, even though they're descending and look like they could be reversals at the top. This will depend a lot on what Bitcoin's doing, a lot on what the dollar's doing, and the overall environment. So don't be fooled. It doesn't mean it's breaking down. It's just not clearly set up that we can have high confidence on further upside, but often these can break to the upside too. I've also included Mana and Luna Classic. We all remember Luna, who was also involved and got implicated, and there were stories about. Wasn't SBF involved in that as well? What hasn't this criminal been involved in? Who knows? You had a structure on Luna, and actually it just missed target and still hasn't made it. So that's some point of interest. But the pick of them all is our XLM Lumen. And I've just received an alert, as you saw. That is real time. Breaking news coming at you from the Crypto Sniper. We have just received an alert. We've just received an alert on this much lower time frame. So remember the falling wedge. First, I showed you the huge weekly structure, 2 impulses, the failure to make a new high at the 2021 bull market compared to the 17 bull market. That sets up a great possibility for the eventual run, if it is to have an eventual run upside. And now we're dropping to the 2 hour, where we're outside of the falling wedge that has come from the 21 high into the bottom of the bear market lows. That was the back end of 2022, and now we've broken that wedge. And here you have, right here in front of you, after a nasty dipping candle that triggered to the downside, you've come and triggered the first alerts on the upside. So is that going to be, having broken and return, move back to the falling wedge twice, is this going to be a wind up structure for further upside on your XLM, your Stellar Lumens? There you go. Our pick of the statist tokens right now, technically, Stellar Lumen. Hit the like if that was not clear enough. Hit the like if it was clear enough. Either way, hit the like. You see what he did there? That was devious. That is just devious. I should be Mashinsky or Freed. Bankman. Call me Bankman. I am the Bankman. Send me your money, your shekels. Yeah, okay. Enough of that foolhardiness. So what else did I want to talk to you about? The macro on the dollar and BTC on the other crosses. Let's keep it crypto and go to Bitcoin. So Bitcoin is your God market. Let's talk to him and say, what does he do? What does he say? Bitcoin, he's been messing about. There will be some technical analysts that will probably warn you of a micro head and shoulder there at the 22.8. You've got this long lumbering right. I don't think necessarily that that's going to happen. I think it's going to be more a function of the dollar. We will go see, but that is also a broadening structure, and you did spill quite down here. So this could happen on this time frame. Remember, we're looking at the 2 hour time frame there. It's not your biggest. We've got a lot going on at the 2 hour, and then we've stepped right back up to the macro, which is when we were looking at Lumen. When we look right back to the macro on Bitcoin, I will take you there now. In fact, normally we start on the macro. Just wanted to get that little concern point out. 22.8 could get a dip back. You could end up on these legacy highs here. And the only problem you have is if you did break that as a micro head and shoulder. The only problem for you with that is if you came down here as part of making that target and then got a rally, you would then have what we call the nestling head and shoulder effect. I'll do this in a different color. You could get setups for further downsides on a bigger head and shoulder if you get that right shoulder with price action over like that. And then you come down and you could break another neckline closer to being in and around the 20,600, that is. Don't forget, you got as high as 24,200. So 20,600, you're looking at around 4,000 minus 400. You're looking at about 3,600 to the downside. That could bring you back to 16.4. I think, well, it's 26, so yeah, we'll lose, how much did I say we'd lose? 3,800 here, down off there. Yeah, it does look like you could lose 16, get down to the mid 16s if that were to happen. Please bear in mind that's not again a call. A, you need this to trigger. B, you need the run to take you at least down to these range levels as well. There is a target implied by this, which would be somewhere around here. Normally you get a little bit of an overrun, so if you overran deeply enough, and then you would still need this to roll over again. So not every 3 bumps in the road, with the middle one being the biggest, is a valid head and shoulder, or even those that are valid, not all of them trigger, and sometimes you just go up. Sometimes the market will just go up, okay? But it's a threat, and there's a higher possibility of that potentially happening. It's never bad to have a look at Bitcoin in other currencies. You can see it against the euro here. Again, it still has the same head and shoulder structure. You can have a look at it against the pound. A little bit less threatening on the pound because it's bleeding up a little bit. You can have a look at it against the yen. And again, not as threatening, but a little bit muffin top. Some people would say the Bart Simpson. I'm not a fan of that particular phraseology. The other thing that's big to watch is that we've been seeding dominance. So these smaller caps, and we have a special trade coming for you as well, which actually will be against Bitcoin. And this is going to make hay of the fact that Bitcoin is ceding power to other tokens. You can see that this is since the BTC dominance run through to the around about 44.8. It is since down to around 43.2 and setting up continuation downside structures. That doesn't mean it goes on forever, but Bitcoin has been taking some strain in its dominance. So the market cap is being eaten by the other tokens rather than Bitcoin itself. Okay, let's have a look at Bitcoin against other asset classes. So Bitcoin against, let's do the NASDAQ. I want to take you back up also to the higher time frames, because overall the story is a bit more positive recently on the higher time frames. So let's do that. That's your falling wedge that I was talking about of Bitcoin against the NASDAQ. And you're going to see the same common trait against both the NASDAQ, against gold, and against other asset classes. So it has been in a bleed down. I would categorize that as your first, this is your big bloated primary narrative, second story down here. That would be one, and then you got a move from this side of the wedge to here, and then low volatility period that inherently is bullish when you get low volatility, generally in most instances, unless you have a bear pattern. Now that could have been a bear flag down, but as it came in, Bitcoin got a bump and is now outside of the falling wedge as I'd drawn it. Admittedly, we've only got 1, 2, 3 interactions with the top line. We probably have more along here, but it still points to a turning and a breaking of the downside squeezing that Bitcoin has been in. Is there any other framings we could do for it? I mean, can we adjust it? Is there anything else that might work? Well, we could try. What if we did that? Could you make it a channel? At the moment, it just looks like a less squeezing version of the falling wedge. So that, if I adjust the draw tiny bit, I could create a scenario where it's still in the wedge a little bit, a bit of tweaking, and you could still have a pullback before you get a break. So this last part was either part of breaking out of the wedge, or that's yet to happen. But you're getting close, where you're now pushing against the red line, which is the one you want to break. It's the one that points to squaring up and upside, squaring through and upside without going further down. And that would be a positive for Bitcoin. I quite like that jaw. There's a number of interactions there before and early. The splitter looks roundabout right, you know, over here. Also where you went impulsive there. You're catching the localized lows a little bit there and there and there. Of course, our head and shoulder that we called, which was a short there. The falling wedge that we said would be an upside break. All of that history is kind of inside of that wedge. So it's encouraging. It may have broken depending on your draw. What about Bitcoin against gold? Very similar draw. And on this one, I feel more conviction that it's broken. We've got to also bear in mind that gold did better than the NASDAQ, so Bitcoin was dragged down steeper and harder. This is a steeper falling wedge. By the way, it was also immaculate on the first cup gold nugget targets that were generated from the bull period. So we were aggressively bull there from October right the way through. Look at the tops you sold. 34.58 ounces of gold to secure you 1 Bitcoin. Today, 12.17. 12.17. Still doing pretty damn well. 12.17 to buy 1 Bitcoin. I think I'd take the gold if I'm honest, but that's maybe just me. I'm had enough of the volatility and the bouncing around. Let me take that box off quickly. So that's potentially a break. So whether you like the last draw that I did on the NASDAQ or you preferred the first draw, I would say that's a sound draw that we've done. Let's make it go away. And this points to breaking out of the falling wedge. However, this current price behavior is a little bit grindy and sickly, a little bit pubic there after shaving with the one, a little bit mangy and a little bit tired. I would suspect a bit of stank and maybe a bit of off-ski. But the macro, as determined by this, is encouraging. Macro is encouraging for further upside to follow, but it may just get a more severe return move towards the wedge before making further highs. So all good, looking good, big time frame, assuming dollar plays its part. But against gold, it looks like when it comes to moving up, Bitcoin will go up faster than gold, as it has done before. However, it may rest against gold first, which often is when they're both going down. And for those of you that follow all markets, which we'll cover now in the macro in a minute when we do gold, gold hits a technical level and is coming a little bit down. So let's move on to that before we give you your free trade and let you go on to greater things and enjoying your evening. So what is the FX markets doing? What is the dollar most importantly doing? Essentially, whether you're American or not, if you're a Bitcoin fan, you want the dollar to be in a high failure state. You want it to be in a failure state generally. What's worse for the dollar is good for Bitcoin. So in that environment, you want weakness. You want weakness. And you did get it. You did get it until Friday's blowout. Hey, we're recruiting so many people, man. We got into the old age home and we're getting this 85-year-olds out of bed and giving them jobs, selling hot dogs on the corner there. This is such a great economy. Wow, we've never had it so good. A recession never felt so nice. By the way, you passed the criteria for a technical recession. However, it can't be ignored that with that non-farm payroll number, you traded from 100.8 on the Dixie and you charged straight up in short succession in 3 straight days. Boom, 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 boom. And now you pause. and you are coming out of a broadening structure of falling down, which is predominantly the euro in this, the Swiss franc, the pound, the yen is also, but in much reduced areas. This is 56% euro. So the euro doing well is good for Bitcoin. Oh dear, you got to choose your friends more carefully, Bitcoin. That's not the only thing, of course. When we're talking about currency effect, that is what I mean. That is what I mean. You want the dollar bad. The Bitcoin during its period of life has gone up many times that both the euro was doing badly and or the dollar was doing badly. But when it is not got a specific driver and there's not a whale load of new money coming in, it needs currency effect in its sales rather than headwind. And that is what we're talking about here. Are we going to get some headwind, or are we going to get a little bit of sale effect? Largely, since this point here, November, it's been terrible for the dollar. But Bitcoin has only kind of improved. It's not done brilliantly, given how much the dollar index has come down. If you're looking at the euro, which is essentially the dollar index to a degree, you can see it fell out of that channel after making the lows and its targets. These were all targets we had. Parity level run, you actually went as low as 0.95. We actually expect in time, if the dollar reverts back to its strength, we actually expect lower for the euro zone. So what did Powell say on Friday? We're going to maintain tight. We are going to continue to tighten. That was not the last rate rise, and for longer we will hold. So we will continue to tighten and for longer. So the game is we will not cut. And when the crisis starts happening, they will be belligerent and say we will not cut, so that they force the crisis to be a big one. A really, really big one. They're going to let the contagion. In short, they're committing to being late again. Only to the downside after being late to the upside, after being late to the previous downside. They've now never more committed to being late. This must tighten until and hold and keep your head under that water until you inhale it. You are coughing and spluttering and half drowned. Then they might unwaterboard you for a second before dunking you back in again. Okay, so we're having a cackle. That is the FX markets. This was gold. Now remember, friends, we want gold to do okay too. As a crypto guy, if you're a crypto guy, you don't actually hate on gold. You want gold to do all right too. So I'll show you this particular gold draw and the rejection it had. Weakness in dollar, people looking for other money alternatives means they will buy Bitcoin and gold. It is what is good for gold generally will be good for Bitcoin too. Not universally, not every time, not exactly, but it tends to point to anti-fiat like behavior. And Bitcoin and gold are in the anti-fiat category. So here we go again, taking him in pink. Your end of your bull market that we called at the same time we were short oil. You can see these interactions across the top. It was pointing to a point of technical fatigue being possible, and we have now seen it happen. And I thought they might shock with a half-point basis point. They didn't. They did 25, and it was the following day on non-farm payrolls that they shocked with an employment number that brought the bid in for the dollar. The debt system. When you do macro, what should be an important chart is the bond market. The bond market. If these yields continue to move up, as we expect they will do, the bonds are losing value. Until you hit a major crisis and recession, then you'll get a bid in bonds and the yields will come down. Right now, the higher the yield that is demanded, the more it needs to happen. You did go sideways out of this and you've had a bump after getting softer. You can see during the dollar weakness, the yields expectations on a 10-year, this is the same time frame, 3-day, we've drifted off. I also want to highlight to you the key levels here. Blue, 3%. 3.2. This funnel is a macro funnel that comes all the way pre the subprime event that saw us dip below 3 and stay below 3 because we were in a financial depression following the subprime event extensively. And this move that saw you first test, break and pull back is now seeing you run above those levels for the first time properly since 2010-11, when we dipped below in the loo to try save the global economy that was flattened by the subprime event. And what are you now doing? You are moving to this major key area of support, and I don't expect it's going to be easy for you to get back under. I think you'll support and you'll start moving up until that demand destroying event comes, where the financial system has been broken by a belligerent Fed that will tighten and hold until such a thing breaks, and then wait till you scream, 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 scream and scream some more before eventually they'll go, we might need to do a few things, and they'll start slowly. Why? Because they were late to inflation and now they're really butthurt about the fact. So now they want to show how strong they are on inflation. So that's your macro segment. So we've done a number of things, and we've got one final commitment to give you. That's the key trade that we're watching that could be nice, that everybody could play on. That is early, it's not late. You're getting something that we're watching inside our community. Thank you again for subscribing. Thank you for your likes. We appreciate it and we're truly grateful. I'm going to tell you what that key trade is after we've summarized here. So small coins on small time frames, hours and 2 hours. There's clearly some action there. Is it of great interest to me? No. We took a technical long on HBAR. We ended up getting the benefit of the Dell news. You just get luckier when you have a process and a setup. Something comes. You see that writing in the sand, there's a reason why it's going up, and there's a writing in the sand. They know they've got some PRable stuff that's coming out and some cred, a big name, Michael Dell, etc., etc. Anyway, so we spoke about the status tokens, which ones are doing. I told you which one I think right now technically is the most interesting, both on the big time frame and potentially worth watching right now on the smaller time frame. That is Stellar Lumen XLM. But we did take a peek at all the other charts and told you a little bit about each of them. We also spoke about Celsius and the situation and how they're all correlated and tied potentially to the FTX people, Almeida. Now we see Tether again, part of the narrative, and what that could mean for exchanges like Bitfinex and Binance. Be careful. I have a little bit in both. Sometimes when I see this, I just want to get out of crypto because you don't know what to trust. And it's very difficult to get. Many people say, yeah, but you were with Bitfinex, you were with Binance, you were with FTX. It's very difficult to get the trade you want in a manner that you want. You can't do everything on Uniswap. You need something that is made for people that are traders, that has some aspect of leverage if you want to make a return. But maybe we should all go back to investing because so much can fail. And by the way, all these FTX events and all these other things that have been happening, they can be visited on you in the banking system as well as fall away contagion. Okay, let's get on and tell you what that final trade that we were talking to you about that you could keep an eye on in terms of the markets. And let's go straight to it. So it's a crypto trade, of course, being the crypto sniper. And we're talking actually quite unoriginally about good old Ethereum. So we've given you Lumen as our pick, and that's fairly hot. But we also tell you could keep an eye on this guy. There's one of two things going to go down here. I've intentionally brought you in on the bigger time frame here. There's one of two things that are going to go by. You're either going to get that. That's kind of like a complex 2 there. You're going to get high enough to make a nice little third and then go really calm, chill and break up. Or, and we don't know this yet for sure, you could actually not go much higher, come down, make a flag or something and break down and end up making a much bigger potential continuation later. So we are watching to see if Ethereum will continue to work its way up against Bitcoin and set up a structure for going up. that could be very beneficial. The value of trading Ethereum against Bitcoin is it doesn't matter then too much what the dollar is doing if you have a decent structure. However, the warning is the dollar had quite a spurt. I showed you those 3 days since non-farm payrolls, quite a spurt to the upside. It might just be a spike in the middle, one swallow, not proving a spring or a summer to be, and simmers back down and goes quiet and does a long period of bottoming. That could be awesome. That means crypto will continue to go up a little bit for a while longer. It's not going to be threatened by a really dominant dollar, and this could be early early notification for you to get long on a break of Ethereum BTC. Or if the dollar got super strong and this level failed, it could start eventually to put the floor on where we think it would probably get some support for going up again. So that is FBTC. You can also see Ethereum dominance. Little bit nervous when I see this because it's kind of a bit grindy along the lows there. And that does set up some element of potentially rising wedge. However, if it gets strong and goes to the upside, it can still pop out the top. But part of me thinks maybe we actually have the downside first on the ETH DOM before basing out again. So that could be on a period, a short period of dollar strength before it then succumbs again to lackadaisical performance. Don't forget, the pound did half a point, 50 basis points. The Eurozone did 50 basis points. America just did 25. However, both those central banks had lagged and got badly beaten up by a strong dollar when they had lagged. Now they're playing catch up. So now they're even. Who's going to move most next time, or are they going to match each other? It's going to be interesting to see. Will you get the currency effect behind Bitcoin, allowing the reflation of the overall crypto sphere? You can trade the smaller opportunities if you like. It's not a recommendation. I don't generally suggest that. You need to move money around lots of different exchanges. Some of them are only on a few. Be careful. Personally, I don't think it's always worth it, but the fact that some of those are moving means there is some nibbling going on out there, and clearly we've seen some good moves out of the status coins like Algo, and we're telling you to watch Lumen. Until next time, thank you very much for watching. I hope you've enjoyed the video, and we'll give us more likes, give us more shares, and we'll happily come and do these more often for you. Thanks so much. Have a great week ahead. Profitable investing and safe trading, and let's hope those exchanges don't fall into trouble. Tell us what you think. Are there still downside shocks to occur? We'll look at your comments. We read every single one. Till next time, bye for now.